All right, welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Great to be back with you. Glad to be back in the saddle. Saw a lot of farm country through the heartland here this last weekend and a couple of days on either side. Things look pretty good, folks. They do really. I know there's always some bad spots some places, but boy, oh boy, not a bad crop right now. Let's take a look and see how the prices are faring. I don't like to see what I saw happen in corn earlier today, but look, we've given back most of our gains. Now, we do have a July board, but that's getting close to being off here. So let's go right to the SEP. That's only up 2 ticks, a half cent to 4.0. Now it's just up 1 tick. 407 and a quarter is last. And then as you go out the defers, we start to lose a little bit, but we're basically unchanged, having been up 4 or 5 cents here earlier. Can't hang on to these rallies, folks. Just cannot do it. Let's go to the beans. They were up double digits at one point here. Today, August is up a penny and 3/4 to 11.47 and 3/4. If you go all the way out the defers, we start to lose. Even though the new crop down a half cent. 11.10 and a half. I don't like to see that. All right. Wheat in Chicago. This is where we've definitely seen some weakness earlier. SEP's down 10.5 cents to 5.79 and 3/4. That's Chicago wheat. 1 tick off the low of the day there, and we've got about an 11-cent range. You go out to the March, that's off 8.25 cents to 6.22 and a half. Let's go to from Chicago to Kansas City. That's the hard red. We'll go right to the SEP. 10.5 cents lower there to 5.89, a penny off the low. And we're working on a 10 and 3/4 cent range. March is down 8.5 cents to 6.19 and a half. Let's move to the spring wheat. What do we got going on here? Well, SEP's down 5 cents to 6.27 and a quarter, 2 cents off the low of the day. In March, that's down 3 and 3/4 cents to 6.61 and 3/4. So we're easier across the board when we talk about wheat. Let's go to the cotton. That too is lower in that Dees contract. That's the new crop there. 23 points lower to 72.87 in Dees. And again, it's just 57 points off the low of the day there. Let's bring him in. Our next guest analyst who sat in for me while I was gone, the great Tommy from Grisafi. He's with Advanced Trading. Tommy, thanks for being on. All right, brother. What are your thoughts here? Corn cannot hold the bid.
No, disappointed, Scott. I'm sitting above you in the studio, and I stepped outside. It was up 3, and then it was unchanged. It didn't take much to it. If I had to guess, there's still old crop leaking, although they're not going to be able to sell it in that July contract. There's old crop out there. The USDA told us that. So you were on Friday. We had that number. You weren't here, but the number came out botched. But even though they gave it to us 6-7 minutes late, that was still the number. So everyone's like, "Oh, the corn went down 20 cents because the USDA," but that's not why it. Once they did get the data to us, here's what they told us: we had too much old crop, and the farmers love to plant corn. At the point someone builds a grain dry, they build a bin and a grain dryer. As you said you spent a lot of time going across the country. That American farmers really adapted well to growing corn. There's a guy out there on Twitter. I have to send you the tweet, but he does really long-term charts, and he said that the Great Bull Run in corn's over, and he sees technically that we could go down another $1. Now that would really upset the ag economy. Tomorrow I have a little interview scheduled with a friend of mine called the Land Talker. And I'm really keeping an eye on those Iowa land prices. I meet with them every month at the first of the month, and we do a podcast on what land prices are doing. And I'll come back and report to you and your viewers if we do start to see a bunch more no sales or prices really drop. That is the one thing holding the ag economy together. There's been so much wealth created in land appreciating and inflation. Inflation made land prices go up, bin prices go up, tractor prices go up, but the actual commodity we produce with all those goods is now well below the cost of production. One other thing that's a real kick in the tooth here is that interest rates are 3 times higher than we paid for the last 15 years. So we were used to borrow at 3 or 4%, store and ignore. Now interest rates, again, still not lowered, 150 days to the election, and we have this elevated interest rate. I kind of am being serious. A lot of times you and I joke, but when you take the price of the corn coming down, the interest rate staying high, we better hope and pray that land price stay high. Otherwise, that equity that the farmer is using, that wealth effect, will deteriorate. Back to you, and thanks for letting me fill in your shoes. Those are big shoes to fill in, Scotty.
Thank you. Well, yeah, I just got done talking about all of those same things with a lot of local farmers up by our place. And, they've had a couple, 3, 4 years that have been not bad, and some of them have been very good. So there's probably a little bit of a cushion in there. But just how long that lasts, just is how long it lasts for the consumer here with non-ag things. But it's going to be something that it's hard to ignore the fact that these prices have definitely come down. and nobody guarantees you a break even. It's just the way the market's. And we had a guest on about 2 or 3 guests earlier than you that was really bearish. We'll see if it pans out. But even Bill Havertape at 88 Hedge said the same thing, that got to worry about corn with a 3 in front of it for sure. So we'll see. But he's forcing a lot of his producers to hedge now. I mean, literally. And if you get a jump and a bump from some short cover from those funds, absolutely take advantage of it. So, all right. Great to have you on. Stay right there, though. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Tommy Grisafi. He's with Advanced Trading, and he's in Nashville. We'll be right back after this. All right, welcome back. Let's talk about the livestock, right? Our furry friends, some not so furry, but let's jump right in and see what we've got, and we'll get to our guest analyst. But we've got live cattle pulled up, gaining some of yesterday's losses back there. August is up $1.02 at 185.30s last there. Move out to the, let's go to the Feb. That's got the biggest number. It's up $2. 189.27 is last there, and that's only 12 cents off the high of the day. That's live cattle. Let's go to the feeders. What do they got for us? Well, August is up $3.70. 261.07 is last there. You move all the way out to, say, even November. That's up $3.42 to 261.37. So everything's got a 3 in front of it as far as change on the day. Pretty good going. We've got some pretty stout prices there. That's the feeder cattle. And moving right along to lean hogs, he says, it's got a little bit of a mixed board. August up $1.42 to 89.60. And as you come down out to, say, even December, that's down 37 cents again. Looks like a little bit of maybe bull spreading, who knows. But Deese is trading at 68.30. Let's bring him back in. Our guest analyst, Tommy Grisafi from Advanced Trading. There he is. Tommy, anything look interesting to you then when we talk about those livestock prices?
Well, when I must have been out of the office watching corn go from up 3 to unchanged, feeder cattle really caught a bid. Sitting in your chair yesterday reading these prices, boy, when you see these lean hogs with a 6 in front of them on that Deese, that's tough. But the one of the things that many of your guest analysts were saying yesterday was that this is that last big push for grilling season. Not that we won't grill all summer, but will they refill we're going to empty the shelves here going on 4th of July. This is just a massive weekend to consume protein here. We're going to party Wednesday night. People will be cooking Thursday. 99% of America's not showing up for work Friday. I'll be lucky if I see you here.
I'll be here also. I'm working. But then we got Friday, Saturday, Sunday. So it's kind of like this hodgepodge 5-6 day weekend. The feeder cattle and the live cattle have a story. Everything they lost yesterday, the live cattle put back on. Feeders up additional. They were down 200 yesterday. They got another $1.50 on that. Incredible bull market here. I hope the cattle and feeder guy understands what can happen here. The process, if you're going out right now and getting into animal agriculture, right,
these prices could be much lower in a few years. Back to you, Scotty.
All right, brother. I've got a house full of guests, so Friday, I might be in here Saturday too. Who knows? Anyway, thanks for being on. Tommy Grisafi coming to us from upstairs, Nashville, Tennessee. Bring it back here again, back over to Suzanne. You know what I'm talking about because I heard you laugh.